Current affairs is the most critical part for UPSC Civil Services examination. But this is also one of the most difficult part for many students to cover the entire current affairs, because there is an ocean of content and students find it very difficult to scoop the most relevant content for the examination. So I thought that I will be making up some classes for current affairs on a regular basis, month on month, covering all the topics which is relevant for the examination. Alternatively, for the last 4 months, we were compiling a current affairs document which is freely available in our website, Educasium IAS Academy.com, and anyone can get into that website and they can able to download the content and they can read it. Over and above that, to make the task of the students much more simpler and easier, I decided to make this class. When it comes to current affairs, we have to study polity, economy, art and culture related current affair events, environment related events, a lot amount of stuffs. Here in this session, I'm going to cover only economics based current affairs for October 2025. Likewise, you will be having classes for 2025 July, August, September, and also you will be having other months as well, so that you can able to do the preliminary examination fantastic well for 2026. Make sure that you regularly watch these current affairs sessions and make notes wherever it is required. I have made it as simple as possible. When it comes to current affairs, the general question student asks is which paper they have to study. You see, we have Hindu, we have Economic Times, we have Times of India, and each of these papers, and also we have Indian Express, each of these papers comes up with various editorials and a lot amount of content. It is really difficult for a student to manage their conventional subject and current affairs, but by following all these kind of news. So it has to be done by an expert. That is the reason I read all these papers, I skim through the PIB content, plus EPW, Economic and Political Weekly magazines, and a few other magazines, which I normally read it in a library, so I couldn't be able to show it here. After reading all these factors, I have synthesized the most crispy content, but comprehensive enough for you people to handle the examination with comfort. So watch this session fully, make notes, and then you can able to identify yourself that your knowledge is improving drastically. After each of the current affair, I will be providing you with a question. You have to pause the video and try to answer that question. Within seconds, I will provide the answer as well. But however, after discussing a content, if you can solve a very simple question, it will provide you with an option to retain the content and reproduce it in an objective way. So let's get into the class. As I mentioned, this session is about October 2025 Comprehensive Economics Current Affairs, A to Z. Okay, so in this regard, the first I have segregated all the news which have happened with relevance to Reserve Bank of India. So RBI brings state and central cooperative banks under Integrated Ombudsman scheme. If you see, Ombudsman scheme is a grievance redressal mechanism. If you have a bank account, you get a dispute in your account. For example, you have a credit card bill for which you couldn't be able to decipher why these charges were put. So you are raising a complaint with the bank. If the bank is not providing you with a proper explanation or a solution, then the concerned customer can escalate the issue to the Reserve Bank of India's Ombudsman. So Ombudsman is technically a grievance redressal mechanism to empower the customers in the financial system. So this Ombudsman scheme was introduced in 1995 under Banking Regulation Act. Subsequent to that, Reserve Bank of India in 2018 brought NBFC into this Ombudsman. So they created a separate Ombudsman for non-banking financial companies, and then an Ombudsman for digital transactions in 2019. Then in 2021, they clubbed all these ombudsmen and they formed what we call it as Integrated Ombudsman scheme. One nation, one ombudsman. So this one ombudsman which is a grievance redressal mechanism. It can able to solve banking related disputes, NBFC related disputes, digital transactions related disputes. And this is not geography based. Any person from any corner of India can able to raise a complaint and get it resolved. So this is not geography based, and this is not one particular entity based. All the customers of any bank can able to raise a complaints. Why this was in news recently? Previously, state cooperative bank and central cooperative bank, which is also called as DCCB, District Central Cooperative Bank. These two cooperative banks had a separate grievance redressal mechanism. They were not part of this integrated ombudsman scheme. But now, even that state and the central cooperative banks have been brought under this integrated ombudsman scheme. So now this integrated ombudsman schemes span have expanded a lot. So that is what this means. Okay. So who are covered? The question in UPSC will come in this fashion. The integrated ombudsman scheme covers which of the entities, and the integrated ombudsman scheme does not cover which of the entities. We will see that what are all the entities which are covered and what are the entities which are not covered. The entities which are covered are all the scheduled commercial banks, that is public bank and private bank. Who are not covered is whichever bank which is in the state of amalgamation, or which are sick, or which is in the process of liquidation, resolution, closure. Those banks are not covered under this scheme. All the healthy scheduled commercial banks, which may be public or private, both are included. Okay. Then you have customer facing or deposit taking NBFC with assets more than 100 crores. So deposit taking NBFC, irrespective of the amount, they are brought into this system. Customer facing NBFCs above 100 crore rupees are brought into the system. Why this classification? I will explain it. Okay, so all the deposit taking NBFCs comes under the ombudsman. So there is no problem on that part. NBFCs which is customer facing or deposit taking NBFCs. So deposit taking NBFCs, irrespective of their size, they comes under this ombudsman. Apart from that, non-deposit taking NBFCs, which is more than 100 crore asset, comes under this ombudsman. Customer facing NBFCs, more than 100 crore assets, comes under this ombudsman. Why these classifications? So remember one thing, deposit taking NBFCs is part of this ombudsman scheme. Non-deposit taking NBFCs, more than 100 crores is part of this ombudsman. Customer facing NBFCs are part of this ombudsman. NBFC stands for non-banking financial companies. So non-deposit taking NBFC less than 100 crore is not part of the ombudsman. Adding to that, core investment companies, infrastructure finance companies. These companies are not part of NBFC. So you may ask a question, sir, the core investment company and the infrastructure investment companies are more than 100 crores. Then they should obviously be part of the ombudsman, right? Then why they have been excluded? Because they are not directly lending to a customer. They are lending to another corporate entity or another institution. So that is the reason they have brought in the system that customer facing NBFCs. So these core investment companies and infrastructure finance companies are not customer facing. They are providing money to one another entity, which is also an institution. Then regional rural banks are covered under the NBFC, payment banks, small finance bank, credit information company, which is regulated by Reserve Bank of India under Credit Information Companies Act. Then you have the prepaid instrument issuers, other financial entities regulated by Reserve Bank of India. In this regard, Housing Finance Corporation, although it is being regulated by Reserve Bank of India, it does not come under the ombudsman scheme. Why? Because Housing Finance Corporation was very recently added to the regulated entity list of Reserve Bank of India. So it is in the transition process. Before getting the transition complete, it will be difficult for Reserve Bank of India to handle the enquiries as part of the Ombudsman. So, Housing Finance Corporation has a separate grievance redressal mechanism. What is the latest entity which have been added for the Ombudsman scheme? The latest entity which was added is state cooperative banks and central cooperative banks. However, you should remember, under the state, central, and below that, it is PACS, PACS, Primary Agricultural Credit Society. Primary Agricultural Credit Society is not regulated by Reserve Bank of India because it does not come under the Banking Regulation Act. Hence, Primary Agricultural Credit Society will also not comes under the umbrella of RBI's Integrated Ombudsman scheme. So, just see the tabulation. Who are the people who are included? Scheduled commercial banks, payment banks, small finance bank. Then you have regional rural banks. You have state and the central cooperative banks. You have credit information company. All the financial institutions regulated by Reserve Bank of India except HFC, Housing Finance Corporation. Then NBFCs, customer facing NBFCs. Non-deposit taking NBFC more than 100 crores. Deposit taking NBFCs irrespective of the asset size. So all these categories comes under the RBI's Integrated Ombudsman scheme. Who are not coming under that? SCBs, scheduled commercial banks, under litigation, under liquidation, under resolution process. Non-deposit taking NBFCs, core investment company, and infrastructure finance companies, because they are not directly providing services to the customers. Primary Agricultural Credit Society is not regulated by Reserve Bank of India. Hence, it is also not part of the RBI's Integrated Ombudsman scheme. Now, pause this. If you see that this is a current affair. For people who are having the access to our course, they can able to check out for more details on RBI and its function class notes on slide number 53, 54 and 55. Okay, now what you do, we'll move to the next topic, which is RBI opens bank funding for M&As, expands rupee lending and strengthens market benchmarks. So these are three different activities which happened in the October month, which is relevant for the examination. We will see one by one. First one, Reserve Bank of India has certain regulations, restrictions for banks to give loan. One such restriction is banks should not give loan for lottery business, gambling business, purchasing gold, or banks should not give loans for purchasing equity, considering that is a speculative investment. So purchasing equity shares, considering the equity shares will go up, that is a speculative motive. So for speculative motive, Reserve Bank of India have restricted the banks not to give loans for equity acquisition. In this regard, now Reserve Bank of India have approved the banks to provide loans specifically for M&A transactions. M&A means merger and acquisitions. You may ask me, okay, sir, if M&A transactions is going to be there, how this is linked with equity? Yes, if I want to acquire a company, I want to purchase the equity of the company. I want to purchase maximum equity shares of the company, then only the acquisition can happen. For this mergers and acquisitions, now banks can able to give loan so that companies can able to purchase equity, but not for individuals for purchasing equity shares, which is for speculative motive. So banks can provide loans for M&A transactions, which is mergers and acquisitions of various companies. The next factor is rupee lending abroad. Rupee lending abroad, now Reserve Bank of India says that banks can able to lend rupee loans in Nepal, Bhutan and Sri Lanka, so that all these countries can start using Indian rupees. So apart from this dollarization effect, gradually we are moving into de-dollarization. When we are moving to de-dollarization, that is using dollars less, and contrarily, we are moving towards internationalization of rupee. So this move is internationalization of rupee. That is, when we give rupee loans, Indian rupee loans to Nepal, Bhutan, Sri Lanka, those people will start using rupee currency for purchasing various products, which will be beneficial for us to make Indian rupee as a major currency in the Indian subcontinent. So this is a RBI's move for propagating the internationalization of rupee. Moving forward, the next one is IPO and share loan limit raised. For example, there is a new company which is coming, which want to provide initial public offer. They want to get into the listed category, so they are coming up with the IPO, initial public offer. As an individual, I want to buy this IPO, but I don't have money. Can I go and ask a loan with the bank? Yes, now we can able to go ask a loan stating I want to purchase IPO, initial public offer. By this way, companies will have companies can able to get more funds, and common people can able to invest on IPOs. Now they can able to take a bank also can able to sell a loan. So now for IPOs, individuals can able to take up a loan and they can able to purchase IPOs. Another factor is I have shares. I have a lot amount of shares. Now, when I'm in a liquidity crunch, I'm not having money and I need money. Instead of selling shares, I can able to pledge the shares and take a loan. I can able to show my shares and take a loan from the bank. That limit is raised. So if you see previously for IPO financing, an person can able to take up to 10 lakh loan, but now they can able to take 25 lakhs as loan. And when we have a shares, we can able to take loan on top of the shares up to 20 lakhs previously. But now we can able to take loans up to 1 crore. So the limits have been raised for both IPO transactions as well as for the loan against share. Next one is Reserve Bank of India have instructed FBIL, Financial Benchmark India Private Limited. So FBIL, it was very much in news often because it provides various benchmarks. FBIL is regulated by Reserve Bank of India. FBIL is not owned by Reserve Bank of India. Remember this. Okay, FBIL is owned by Indian Banking Association and FIDAI and FIMMDA. So that is a separate category. So if a question comes on Financial Benchmark India Limited is owned by Reserve Bank of India, no, wrong. FBIL is regulated by Reserve Bank of India. Yes, its job is to provide you with various benchmarks. Okay, with various benchmarks. So in this category, FBIL previously used to compile benchmark indexes based on US dollars, euro, etc. But now Reserve Bank of India have requested FBIL to go for various currencies like euro, GBP and other currencies as well, so that they can able to have a wide variety of benchmarks for people. So this is an news which have been very prominent recently. News in this category is banks can now finance M&A, rupee lending can be done abroad, like Nepal, Bhutan, etc. IPO and share loan limits have been raised. FBIL market have been reformed with various currencies. If you want to check out the conventional part, go to the monetary policy class and check out about FBIL and its ownership. Now pause this video and try to answer this question. Which of the following best describes the recent financial reforms announced by Reserve Bank of India? Try answering it. Pause it and try answering it. The answer is RBI has permitted Indian banks to finance mergers and acquisitions. RBI establishes Payments Regulatory Board to oversee digital payments ecosystem. Payment Regulatory Board, not only for digital payments, but also for all the payments. But the news statement says that RBI establishes Payment Regulatory Board to oversee India's digital payment ecosystem. Previously, we had what we call it as Board for Regulation and Supervision of Payments and Settlement System. Now, to strengthen it, with a diversified membership, RBI have established what is called as PRB, Payments Regulatory Board. This is very similar to Monetary Policy Committee. Monetary Policy Committee has 6 members. Payments Regulatory Board also has 6 members. Payments Regulatory Board is formed according to the Payment and Settlement Act. So it is a statutory body. So it has 6 members. These 6 members are 3 members from Reserve Bank of India and 3 members from the government side, government nominated members. These 3 members from Reserve Bank of India, one from Reserve Bank of India Governor, who is the ex officio chairman of Payments Regulatory Board. So who is the chairman of Payments Regulatory Board? Reserve Bank of India Governor. He is the ex officio chairman. Then you have Deputy Governor Payment and Settlement, Executive Director Payment and Settlement. The people in the government side, that is 3 from the government with 5-year tenure. How this membership differs from Monetary Policy Committee is, in Monetary Policy Committee, the government nominated members term is 4 years. But in Payment Regulatory Board, the government nominated people's term is 5 years. Another key difference between MPC and PRB is, in MPC, if there is a tie, the governor has a casting vote. That is, the governor will first vote. If there is a tie, he will again vote. But in this case, in PRB, the governor has a casting vote. In case the governor is absent on the day, then the deputy governor has the casting vote. So this situation is not there in MPC. So in PRB, governor has a casting vote. If the governor is absent, executive director, deputy governor of Payment and Settlement will have the casting vote. So net, RBI has the domination over this Payment Regulatory Board, although government members are present. Okay, so PRB has how many members? 6 members. It is a statutory body. It replaced Board for Regulation and Supervision of Payment and Settlement System. It was created under the Payment and Settlement Systems Act 2007, responsible for regulation and supervision, electronic and non-electronic payments, domestic and cross-border payments. So Payments Regulatory Board is responsible for regulation and supervision, electronic and non-electronic, domestic and cross-border payments. Now, pause this video and try to answer this question. The Payments Regulatory Board recently set up by the RBI will, what it will do? The answer is D. Replace the Board for Regulation and Supervision of Payment and Settlement Systems and include both RBI and government nominated members. Moving forward, the next one is surplus SRVA balances can be invested in corporate bonds and commercial papers, not just government securities. What is SRVA? I have covered it in banking products class. Students can able to watch it or download the latest class notes and check it. SRVA account is also called as SVRA account. SVRA is Special Vostro Rupee account. So Special Vostro Rupee account is an account opened by a foreign bank in Indian bank in Indian rupees. So a foreign bank have opened an account in India. Russian bank have opened an account in Indian bank. So now what happens is, a person in India who imports Russian product will deposit this money in this SVRA account. This money is owned by who? The Russians. Now, Russians can able to purchase products from India and they can able to pay it from their SVRA account, because money is there in the SVRA account. Apart from this, they can hold it as a cash in the SVRA account, or they can able to purchase only government securities. So previously, SVRA account, they can able to pay imports from India, invest in permitted Indian assets or hold rupee reserves. So this is the situation. The situation until 2025 is the SVRA account or SRVA account. From there, the Russians or any person who's holding that account can able to spend money for their purchases from India, or they can purchase government securities, or they can able to hold it as cash in that account. But the foreigners are not much interested on this. What's fun in this? We are not making big money on this part. We have to purchase only government securities or hold it as cash, or we have to purchase products from India. Why not other products? So now the government, that is the Reserve Bank of India, have told they can also purchase AAA rated corporate bonds and commercial papers. So now Foreign banks holding account with Indian bank, which is a Vostro account, any money which is retained in that account can be used for what are the purposes? Purchase products from India, just have it as a cash, or purchase government securities, or you can able to purchase corporate bonds or commercial papers. So this I have in detail covered in the banking products, but this is a current affair part. Now pause the video and check whether you can able to answer this question. The answer is surplus SRVA balances can now be freely converted into foreign currency and remitted abroad without RBI approval. Totally wrong. It cannot be converted into foreign currency and it cannot be taken out as well. Moving forward, the next current affair topic which is of interest is Reserve Bank of India report highlights 6 times growth of India's digital payment between 2019 and 2025. Yes, so the digital transactions have multiplied into 6.4 times, and the UPI have moved to 16 times, and the volume of transaction 16 times, value of transaction 13 times. Digital economic ecosystem such as FASTag, Bharat Bill Pay system, NACH, all these factors have played a major role. Even NEFT and IMS have tripled and doubled. So this shows that we can able to have lot amount of the velocity of money is more, the transactions are happening fast, more inclusive financial system. So all these factors comes into the picture. So now pause this video, try to answer this question. According to RBI Payment Systems report, which of the following statement best describes India's digital payment growth? Answer is C. India's total digital transaction volume increased more than 6 times and blah, blah, blah. The next topic which is of important from the examination point of view is India's Forex reserve crossed US dollar $700 billion for the first time. You people know, we have discussed in the class, India is the 4th largest country having largest Forex reserves. So India is the 4th largest Forex reserve holding country. The first one being China, Japan, Switzerland, followed by India. This was somewhere around $400 billion some 5 years back. Gradually, we have developed this, we have accumulated lot amount of Forex, and now our Forex reserve is $702 billion and going upward. This is a very positive sign. Okay, lot amount of benefits India can able to get. India's credit rating will improve. India can able to manage the current account deficit. India has a very good import cover. So these are all some of the coincidental topic on this part. India's Forex reserve is maintained in 4 levels, 4 patterns. The first one is the foreign currency assets. I'm not going to explain all the factor. Foreign currency assets followed by gold reserves, reserve tranche position, also called as gold tranche, and special drawing rights. Among these, one another landmark achievement we have made. The first landmark achievement we made is we are the 4th largest Forex holder with $700 billion as Forex reserve. The second landmark achievement we have made is for the first time India's gold reserve have crossed $100 billion. This is the first time India's gold reserves have crossed $100 billion. 2 reasons. One, India have brought lot amount of gold which it had in other places, and also gold value have appreciated. So this appreciated value have transformed into RBI's Forex reserve going up with gold reserves as more than $100 billion. So 3 important factors which is important here. India is the 4th largest Forex reserve holder. India's Forex reserve have crossed $700 billion and India's gold reserve have crossed $100 billion. Next, moving further, I have covered this in the Forex management class. If you want, you can able to check it out there. Pause this video and check out this question. Try answering this question. Pause. The answer is India's Forex reserve crossed USD $7 billion. Answer is C, which I just explained. The next topic is RBI has proposed a transition from the incurred loss model to the expected credit loss model. Very simple one. We have discussed in detail about this kind of stuffs in the non-performing assets class. So normally what will happen is a bank will be behaving reactively. Only after a loss have occurred, they will identify that loan as a non-performing asset and then they will start provisioning. Provisioning means arranging for money to fill the gap which the non-performing asset have created. So a non-performing asset, a bad loan, have created a vacuum in the balance sheet. So to settle that hole, we need to provision money from other sources like our other earned profits and fill it up. Previously, banks used to do this provisioning only after the loss have occurred. That is called as incurred loss model. But now Reserve Bank of India says that the banks should move to what is called as expected credit loss. Expected credit loss is you analyze the historical data. Based on that historical data, you have to arrange for required provisioning. So, expected credit loss model is a proactive model and incurred loss model is a reactive model. So, what you people have to understand is, in the examination, question will be asked as a statement. Recently, Reserve Bank of India moved from expected credit loss to incurred loss model for handling for loan provisioning. Wrong. They moved from incurred loss model to expected credit loss model for handling loan provisioning. Okay. Now, pause this screen and try to answer this question. Pause. The answer is C, requiring banks to provision for potential losses before default occurs. Next, a populist news. Reserve Bank of India warns states against fiscal slippage and pre-election populism. Populistic measure or populism means spending for satiating the people, voters, so that a political party can get the votes. Populist measure to get votes, productive measures to develop the country. Which one you will choose? Populism or productive expenditure by the government for the taxes you pay? It is the productive measures. So that is what Reserve Bank of India is also saying, that elections are coming, so these states should not jump into a populistic measure and start announcing a lot amount of TV, fridge, free 1,000 rupees for everyone, and likewise giving away money, so that it will cause what is called as fiscal slippage. Fiscal slippage is the state government cannot able to handle the loan burden. Already the state development loans, which is provided by, which is a kind of long-term borrowing which is done by the state, the interest rates have gone high. And the states alone have borrowed nearly $5.23 trillion. Trillion rupees. 5.23 trillion rupees. And the populist spending have been around 68,000 crores on the pre-poll time period. So RBI is just warning all the state governments, be cautious. Don't just flush away the money and throw away the money in terms of giving a lot amount of pre-poll assurances so that people can able to take it up. This is this kind of factors you have to check it out in our class notes on fiscal policy and the FRBM Act. And now pause this video and check out this question. Pause. Answer is A. Moving forward, next one is RBI proposes for same-day credit of inward foreign remittances. Same-day credit for inward foreign remittances. Remittances are money which is coming from the Indian diaspora into India. So my brother is working in United States. He sends money to India. That is a remittance. Why this is very important? Because For several years, India is the largest remittance earning country in the world. For several years, India is the largest remittance earning country in the world, followed by Mexico, China, and Philippines. So these remittances are coming to the bank, but it is not immediately getting credited to the customer's account. So customers are losing either the dollar currency conversion values, or the customers are losing money and waiting for the money to be credited. So for this purpose, the Reserve Bank of India have strictly told that same day credit rule. The day money comes in, you have to immediately convert it and credit it to the customer. You have to reconcile the payments, incoming payment and the credit immediately. And following that, you should integrate all these factors so that a credit advice is sent to the beneficiary, and credit advice is also sent to the remitter as well. Okay, so this is something which is associated with our Forex management one. So this is a current affair, and here what we see is a conventional connect. The RBI, now pause this video and try to answer this question. The RBI proposed remittance reforms primarily aim to, what is the answer? The answer is D. Enable same-day credit for foreign remittances through automated real-time systems. Next, Reserve Bank of India Governor Sanjay Malhotra, he attended a meeting which was organized by IMF and World Bank together. In that annual meeting, he emphasized that India and all the countries should focus on CBDC, central bank digital currency, instead of focusing on stable coins. What is a stable coin? Stable coin is any cryptocurrency which is backed by an underlying asset. Majority of the stable coins are putting their underlying asset as dollars. Now, what Reserve Bank of India governor says, RBI Governor Sanjay Malhotra says, we are trying to move towards de-dollarization, use less dollars, and internationalization of rupee. If we focus on stable coins are backed by dollar, and again this will lead to dollarization effect. Hence, we should move away from stable coins and we should focus on CBDC, so that the central bank will hold the sovereign power of issuing a currency. The black markets, money laundering, all these patterns can be able to be eradicated. Adding to that, Reserve Bank of India can able to, also it advocates that we have, all the central banks should participate in the BIS, Bank of International Settlements, M-Bridge, and International Monetary Fund's XC platforms, because these platforms are interface linkage between multiple CBDC. So various countries' CBDC can able to be transferred between one country to another country through this pattern. Okay. In our money and currency system, we have covered about the stable coins and other cryptocurrency related information. Check it out. Pause this video and check this question. Try answering this question. Pause. Answer is B. To ensure monetary sovereignty and reduce dependence on dollar-pegged digital assets. The next is not about Reserve Bank of India, but about mines and minerals. There are several happenings, current affairs, which is associated with mines and minerals is a favorite topic for UPSC to ask question in the examination as well. So the first one is limestone have been fully declared as a major mineral. So what is this? The Ministry of Mines have reclassified limestone entirely as major mineral, because previously limestone, based on the quality, it will be used for multiple purposes. Certain purposes, when it is used and when it is quarried, those limestones are considered as minor mineral, and limestones of high quality which is used for certain purposes is classified as major mineral for those end use. Now the government wants to remove the confusion, because the major mineral and minor mineral makes up an ocean of difference in terms of regulation, royalty, exploration, excavation, and the powers between the state government and the central government. To avoid this confusion, the central government, that is the Ministry of Mines, have reclassified the limestone as major mineral for all end use, irrespective of whatever the purpose you are going to use. For all end use, it is that. So they have amended the MMDR Act and made it as a major mineral. So it is a regulatory shift, and the rationale is industrial usage has expanded to cement, steel, fertilizer. For various factors, limestone is being used. The conventional connect, we have an elaborate session on mines and minerals in which we discuss about what is the difference between major mineral, minor mineral, specified mineral, notified mineral, critical mineral, and rare earth elements. Watch that session for for better understanding. And now pause this video and try to answer this question. Which of the following correctly explains a recent decision? Okay, read it and answer it. The answer is A. Limestone has been fully classified as a major mineral. Easy one. Now, the next one is India launches 14th round of commercial coal mine auctions with a focus on underground coal gasification. You see, totally 41 mines were auctioned and 20 are fully explored, 21 is partially explored, and 21 qualifies for underground coal gasification. What is coal gasification? You see, coal mining requires lot amount of infrastructure. Many of the coal reams will be in the depth. We can't extract coal from there. Alternatively, pumping steam and certain chemicals, we can able to convert the coal in the depth into what is called as syngas or combustible gas. That gas we can able to use it for various productive purposes. So although we can't bring the coal out back, at least we will extract the coal gas through what we call it as coal gasification, which creates the syngas, which is a combustible gas. This provides an option for green energy, reduction of fossil fuel, clean energy. Rather saying green, it's better clean energy. Compared to coal, syngas seems to be a clean energy. Okay, pause this video and answer this question. The answer is B. Underground coal gasification was introduced for the first time in this round. Previously, this was not. The next one associated with mines are the Ministry of Mines launched the State Mining Readiness Index. India is sitting on top of huge mines and minerals, but still we are importing a significant portion of natural materials from other countries. To avoid this, we need to make sure that things are the states must be completely ready with all sort of infrastructure, government approvals, auctions, royalty collection, and everything else, monitoring, supervision. So the first structured framework to benchmark mining governance and operational readiness. So this State Mining Readiness Index is launched by Ministry of Mines. Sometimes they will mislead you with Ministry of Coal. It is Ministry of Mine, which comes up with auction performance, early mine operationalization, exploration focus, sustainable mining practices. And they rate the states based on mineral rich state or emerging state or developing state. So you don't need to remember the states and all. You should at least know what is SMRI, State Mining Readiness Index. Pause the video and try to answer this question. Okay. The answer is B. It ranks states based on auction performance and early operationalization. Then Ministry of Coal came up with two concepts called Clamp Portal and Koila Shakti. Koila Shakti is a unified digital interface which will connect the entire coal value chain. That is from auction, operationalization, coal extraction, coal washing, coal transportation, reaching the thermal power station. So all these factors will be digitized, and in one digital dashboard you can able to see all these factors. Real time we can able to track. So thermal power stations can able to identify how much coal they have, how much coal they need, where coal is available. So they can able to purchase those factors and order it. Another factor which came on this way is clamp portal. Clamp portal is acquisition of coal related factors. So the government acquires a lot amount of land for the purpose of extracting coal. Government in the sense Coal India Limited and other companies. So all these land acquisition factors are being digitized in what is called as clamp portal. And you should just know what is clamp portal and what is Koila Shakti dashboard and what is the purpose. The next news which is of important is about not coal, but a coal which is under pressure and got converted into diamond. So the diamond, natural diamond, a new concept is LGD, lab grown diamond. The World Diamond Council have come up with a report stating people are now getting disinterested on the lab grown diamond. Lab grown diamond will look exactly similar to natural diamond. But however, now people are focusing more on natural diamonds rather than lab grown diamonds. Why? Because people feel that natural diamonds are much qualitative and a lot amount of lab grown diamonds are coming into the market. It is no more fun having something which everyone can able to have it. So people are not couldn't able to much associate themselves with the lab grown diamonds. Okay, WDC is a not-for-profit organization, that is World Diamond Council. Kimberley process is a process which is established to prevent conflict diamonds. Conflict diamond means whichever country where there is a coup or where there is a dictatorial or some sort of terrorist organization which is engaged in mining, or rebel group which is engaged in mining diamonds. So those diamonds are called as conflict diamonds. Kimberley process ensures conflict diamonds are not part of the market. Lab grown diamonds are created under two processes. One is HPHT and another one is CVD. HPHT is high pressure, high temperature. So that is a method using which they can able to create a diamond. CVD is condensed vapor deposition, which will be created in a microwave oven kind of structure where they can able to create that diamond. If you are interested, just Google it in YouTube and watch a small 1-minute video on what is HPHT diamond and what is a CVD diamond. Now pause this video and try answering this question. The answer is A. Another beautiful one, of course, I feel that this is something which is important for a day-to-day consumption pattern. That is, nationally interoperable LPG delivery system. Nationally interoperable delivery system. So there are various oil marketing companies. We have Bharat Petroleum, we have Hindustan Petroleum, we have Indane, or Indian Oil. So likewise, there are various public and private players who supply liquefied petroleum gas cylinders to households and commercial entities. The problem here is one OMC can able to support their customers only. If I am purchasing cylinders for my home from Indian Oil, I can able to purchase only from Indian Oil. But now, what Petroleum and Natural Gas Regulatory Board says, anyone who is raising a request for a gas cylinder, the request will be waiting for 24 hours with the exact OMC with which I am connected. After 24 hours, automatically the request will be routed to the another OMC which can deliver the cylinder to me. So no more waiting time. We can able to easily get cylinders, and with this plan, although I am a customer of Indian Oil, I may get my cylinder from HP, or I may get a cylinder from BP, Bharat Petroleum, or anywhere else. So all the people who need cylinder can able to comfortably get the cylinder in less than 2 days. So for within 24 hours they have to deliver. If they are not delivering it, automatically the request will go to the nearest agency which will do this process. So consumers to receive cylinder refills from any nearby distributor, irrespective of their oil marketing company. Automatic rerouting. If orders are not fulfilled within 24 hours, automatically the order will be rerouted to another OMC, which will be readily available to do it. Cross OMC delivery. Customers of one OMC may receive from a different oil marketing company as well. Okay, if you see that many years back, we have to book a cylinder and wait for 10 days, 15 days. Okay, so we have to be very cautious in terms of handling that. But now things have changed. We can able to comfortably get it. Pause the video and try to answer this question. The answer is allow LPG refills from any nearby distributor regardless of oil marketing company affiliation. Next one is WOPA. WOPA means Vegetable Oil Products Regulation Amendment Order 2025. So India is the largest importer of vegetable oils globally, and 60% of India's demand is imported. The top 3 imported vegetable oils are palm oil, soya bean oil, and sunflower oil. That is the descending order. So palm oil 59%, soya bean oil 23%, and sunflower oil 16%. Ministry of Consumer Affairs, Food and Public Distribution, under the Essential Commodities Act, it have amended the WOPA rules, Vegetable Oil Products Regulation Amendment Order. So what this change is going to make? Mandatory registration is required. Everyone should register. Whoever is handling oil, vegetable oil, should register it, and the traders, stockists, everyone should register. Monthly, they have to upload the data. What is the stock? What is the stock received? What is the amount of oil they have sold? If they are not following, there will be a penalty. Why they should do this? Because there are many complaints that big traders are hoarding their stocks without sending it to market, making the prices to go high, and then they are releasing the products. To avoid these kind of scams, the government have amended the WOPA rules. So WOPA rules comes under the Essential Commodities Act. Essential Commodities Act comes under the Ministry of Consumer Affairs and Public Distribution. Pause the video and try to answer the question. The answer is D. Digitally regulate the edible oil sector to curb hoarding and ensure real-time market data transparency. With this, I will stop this session and I will do a part 2, completing the entire economics which is related to civil service examination or other state public service commission examinations for the month of October 2025. Thanks for watching, and make sure that you watch the part 2 as well. All the best.
Epic UPSC Classes by Educasium. Your journey to success begins here. Affordable, accessible, and comprehensive UPSC coaching in Tamil and English. Join now.